Welcome back, everyone, to The Daily Show. My name's Tom. Today, we're covering everything from the macro to the data to the dark pools from Wall Street. And of course, there's a lot to get into as always. The big updates of the last 24 hours, semiconductors were down across the board. Tesla and Google earnings are being awaited. And of course, we also know that healthcare had its first little tick up. And this kind of shows the potential here of a defensive move from Wall Street. Speaking of defensive, Ray Dalio's latest filings show that he sold S&P and basically moved into Baba and gold. Yes, he just bought two things with his $1 billion. And he's pretty big on, of course, the China play and also very big on the idea that fiat or the US dollar might be weakening. And then, of course, he's going into one of the old school plays, which is gold. Now, you guys know that I've been bullish on both China and gold for quite some time now. And recently we started to see that injection of liquidity. But just remember, these data points are always out of date. So whenever you hear them, they're interesting to look at, but never follow these types of things. Make sure to look at it in the price action. And if you had been doing that, you would have noticed that both of them have been picking up for quite some time. So of course, don't do what they're even doing because it's too late. Instead, look at the price action, follow the flows, and look for the more clear data like we do on the show here, such as dark pools, CTAs, and other things that are happening right now. Speaking of one of those leads, of course, call options. 70% of all options written right now are calls. And they might think that's kind of scary, and it is, because the last time we saw it was that 2021 bull market hype that led to some of the wildest stock valuations that we've ever seen. It also led to declines ultimately of upwards of 90% in some of these hypergrowth stocks, but it's back. And why is this important? Well, it's important to note that momentum is currently the trade. Value, yeah, that was a thing of 2005. But we have not seen value do very well recently. And later on in today's video, we have a chart that will really show something that you can look at when you're trying to track these markets. Because of course, value and momentum, it's always important to know which particular section of the market's doing well. To make matters even a little bit weirder, it's all like 2021 again when you start to look at participation. Retail activity is really high this year, and it's the highest it's been, as you guessed it, since 2021. So there's more traders, there's more investors, and while I think it's also exciting, and I hope that you join our community and obviously join us here on the daily for the show, it also is a little bit worrying because it means that there are a lot of new faces in the markets, and of course that could mean the rug could get pulled on many of those. We've seen hypergrowth stocks, we've seen FinTech 2.0, which we're tracking at the moment, and more updates coming on that soon. And of course, we've seen the rise of the zero DTE. Now, if you're not aware of this, this is a single day options. And basically, it looks like 2/3 of all of the single day options are going to retail traders, which to me is just absolutely insane. So you can see here the growth of zero DTEs. And this is why we follow those options charts all the time here on the channel, because it's very important to know where the positive gamma and the negative gamma switch levels are so that you can marry that up with your technical analysis charts and, of course, get further edge in markets. Let's talk about earnings sentiment. Coming into this earnings season, everybody's bullish. Wall Street has absolutely set the bar super high, and it's kind of priced to perfection. We've seen things like Netflix come out, excellent result, yet it still dropped. We've seen the banks come out, very good results, yet they still dropped a little bit or stayed sideways. And the reason why that is the market's pretty good at pricing a lot of these businesses, and the left-hand side has been vertical, the third fastest V-shaped recovery ever recorded. And that means that at some point, there might be a pullback to what we call the weekly 20-moving average. Now, we've been talking about for a week and a half. We've still seen rotation into other sectors. So remember the abundance mindset we practice here on the channel. So many opportunities. But we have seen a couple of dark pools. We reported just 24 hours ago that all these weird ghost kind of trades came through, which of course, or phantom trades, which were in the amount of $4 billion all through the S&P 500. So this is near these highs here. And we also have now seen a 2 times levered Nvidia position show us a couple of big ones. So this was just before we saw the sell-off yesterday. And this was the number 1, the number 2, and the number 4 for, yes, okay, a 2 times long ETF. But that's probably a bit of profit taking. And it does start to show the signs of potentially Wall Street showing their hand. So it's happening a little bit here. We're also seeing Hood, we're seeing Coin, and all those FinTech 2.0 stocks kind of starting to come off the boil. And some of these have those massive candles. You know, I'm a big believer that if you have 2 to 3 giant outstanding weekly candles that are just so unusual for the stock, you've got to start thinking about the risks. And of course, if the market is going up in a nice, steadily way, high highs, high lows. I've got something on my LinkedIn actually about this where you can actually see how to tell a really good bull market. There are differences, and when it gets very volatile and you see swings up and down, that generally shows that Wall Street or a big player has started to take profits. What about the overall period of time? Well, you guys know seasonals. Most people do now. It used to be an extremely good read on markets. And when I first got into markets in 2005-6 period, this was one of the best things to do. But you can see here it's kind of up, down, and all around. So in general, we usually have a bit of a chop market at this period of time, and that makes sense also to post-election years. It also makes sense to the stats that we've been sharing when it comes to the last 2 years being 20% plus. It would kind of be here that Q3 could be a little dangerous. Q4 looks pretty good into the Christmas rally at this stage. And you've got to remember that, yes, the companies are actually earning what the street is asking for. It's just that they've pumped it up so much. So it's like that buy the rumor, sell the fact. Now, are we at a VIX period? That means that basically an area where the VIX starts to spike. Yes, a lot of you would be aware of this. In terms of statistics, you can see here that the VIX generally does spike when it comes to July, August, September, and it's one of the big periods of the year. A lot of people don't know this, but August is actually one of the highest stats in terms of seeing VIX spike over the last 20 years. So it's one of those reads where seasonality also makes sense to volatility. But we're just not seeing that yet. And what that means is that if you use a combo, healthcare, utilities, and staples, which is over on our X account, links in the description, then we also have a very low level. Now, we have not seen the market so low in terms of these stocks, which basically means only 17% of the market is actually made up of these sectors now. We have not seen such low market cap share of the overall market since, as you guessed it, the dot-com boom. Now, you could argue that we're in the AI boom right now. And again, timing is going to be everything. But this is certainly one of those charts you want to check, and we always look for it. If defensives start to rise, if value starts to rise, it can be a sign of big players starting to turn defensive. They haven't done it yet, but if they do, we'll be watching. S&P 500 and the 20-day moving average. You guys know that we're at like 60, 61 days now. According to Subu Trade, that means that there's more likelihood of a little bit of a decline this week based on stats. Only 11% of the time 3 days later, which would be Wednesday, and only 22% of the time 4 days later were markets up. But the good news for longer term traders and investors is that even with these stats, overall 3 months later, 100%. And that goes back to that kangaroo style market, the pullbacks and the rallies and all sorts of things that tend to happen around this time of year. It's one of those points where maybe powder dry could be there or something else. Another good read here from Daily Chartbook, you can see, courtesy of Goldman Sachs, is that the CTA estimates, these are really interesting. If we look at the tape here over the next week, they have to buy. I mean, they're buying 10. We've already reported on this, but they've got 10 billion, 9 billion, 7 billion. Doesn't matter whether the tape goes up, down, all around. They're being forced to purchase into the markets. Over the next month, however, if the market does go down, they are able to sell. And you can see here that would be a negative 44 billion move. So CTAs do make up a good part of how markets move. We know they're behind. And this rally has been driven by mostly retail traders, like retail traders and hedging and gamma squeezes and all sorts of things. It's just like 2020 again. We're doing the same thing. And Wall Street will eventually want a cheaper price so they can get their special commissions and bonuses, but they haven't been able to do it yet, or maybe it hasn't been profitable enough yet. You've got to have everyone in one side. Speaking of everybody on one side, short US dollar. We've talked about this. Wowzers. I didn't expect it to be out this high. 34% short US dollar, guys. That's the most crowded trade of the market right now. So this is considered generally a defensive. Generally, people are obviously more bullish dollar if they're being defensive, while no one is long the dollar. And as we've talked about, the dollar might be starting to do that kind of head and shoulders pattern over here, which could force a upward tick in the dollar. So remember, price action will show the flow, and that's why we follow it here on the channel. And we'll have that coming up later. But yeah, long Magnificent 7, it's pretty high still. Long gold, that's what happens when you get sideways. It comes from the most over